those just tuning in, reintroduce our guests. Some people just tuning in.
We have Danielle McLean here. She's a practicing real estate lawyer in Dartmouth, Nova Scotia, and she's going to talk to us. We're going to do a little bit of a deep dive into some of the nuances around real estate law. You know, we talk all about mortgage lending, we talk about real estate, and we kind of dip our toe in the water talking about some law. Now, we have an expert here. Obviously, this is not any legal advice. It's going to be general. Certainly, as she said, if you have specifics, you can reach out to her or talk to your lawyer.
So private sale, the bane of some's existence.
Not fun for me.
Yeah.
Lenders ask a lot of questions. Now tell me, Danielle, private sales, what do you think?
So there is a lot of value in having a good realtor behind you, especially when you're spending hundreds of thousands of dollars. So with private sales, you're right, the lenders are asking a lot more questions. They're asking a lot more questions of the lawyer as well. And, you know, you've got the lawyer drafting the purchase and sale agreement, but I'm not there. I'm not in that house. You know, a realtor that's experienced is going to go in. They know what to look for. They're going to say, you should be having this inspected. This looks wrong to me. Here's a list of professionals that I use. They're going to make sure that you're getting proper disclosures. Private deals, there's usually one party that's making out a lot better than the other one.
Really? Eh?
There's one driving the bus.
And is it quite evident to you as the lawyer?
Well,
looking at the deal?
Typically it would be, and I can't advise somebody on what they should and shouldn't pay.
Especially
although
at that point.
A lot of times the lender on appraisal, things will work out there.
And I would say most private sales are appraised.
Yeah.
Because the lender wants to make sure, or the insurer wants to make sure that the value is there.
And there's a big difference between a private sale when you're buying something from your grandmother versus you're buying something from a stranger because you saw it on Kijiji. And those are the ones that really worry me, and those are the ones that seem to really worry the lenders as well.
They often ask me, they're like, what's the relationship between these two parties?
I get asked
like,
the
how
same.
do they know each other?
Yeah.
It's like, oh, it was a family friend. Oh, it's a neighbor. You know, if it's something other than that, they're asking a lot of questions, and I would say there's even more like due diligence.
So that goes into how much trust that a listing on MLS sold by a realtor.
Totally.
That shows the value of that.
Well,
quite
with realtors,
honestly.
there's usually two realtors involved.
Right. So I guess from a risk standpoint, the lender recognizes that. That speaks to a lot about the industry.
Definitely.
Yeah.
I've always been pro realtor. Even from when you're listing, typically you're going to get better value if you are using
Typically,
a
you're
realtor.
Sell faster.
You're going to sell faster for a higher
more.
price.
Yeah.
So you're paying commission, but you're still coming out ahead. And
Right.
you're going to have a lot less pain, and you're going to pay your lawyer a lot less because I'm not involved in these negotiations and agreement drafting and calling lenders.
Your time costs
my
money.
time costs money, and your time, everybody's time costs money, and it just. Private deals, I see a lot more of them than I used to.
And I see a lot fall apart.
A lot of them do fall apart because if you've got a realtor, again, they're making sure that the people are already pre-approved, hopefully, before they're bringing them over to a seller.
I see so many private sales that we haven't even pre-approved the client. We've never heard from the client before, and they come in. It's like, we're asking a lot of questions, too, because we want to make sure that we're doing our due diligence and protecting everyone
Why do you
involved.
think there are more now than before?
I think it's because the real estate market is more hot than it was before. I think some sellers think they can just, sell easily.
I think that's exactly what it is. Yeah.
Like, I can sell for top dollar. Why should I pay a realtor? I can just sell this on Kijiji.
Yeah.
It's interesting though, because nobody, every seller thinks their house is worth more than it is, and every buyer thinks it's worth a lot less. So it can be.
It's how do you get together?
Yeah.
Okay, I wanted to ask you about the transfer tax, the deed-transfer tax, and there's also a pretty hefty tax for people buying out of province that I think people should know about because not everybody. I know not everybody knows about this, so let everybody know what some of those larger costs are.
Sure. In every municipality, you're going to have a municipal deed transfer tax. So everybody's going to pay that one. That's 1.5% in Halifax of your purchase price.
Right.
So
it's a big number.
It is a big number.
And different municipalities are different numbers.
Different municipalities are
different
different numbers.
Are there any municipalities now that don't charge?
There was until about a month ago.
Okay, so they're all charging deed
You're going to have
tax.
some level of deed transfer tax. Most of them are at 1.5%. You can go online and you can find the deed transfer tax rates for the area that you're looking to buy. So last year, the province came out with a provincial deed transfer tax. So you've got the municipal one, which the municipality collects. The provincial deed transfer tax is going to apply to residential property being purchased by somebody that's not a Nova Scotia resident for tax purposes or won't be within 6 months.
Okay.
So that's 5% of the bigger of the purchase price or the assessed value.
Wow.
So that's a big chunk of change.
Huge
so
money.
you can have people in some instances paying, 5 plus 1.5% in transfer taxes.
I mean, that's prohibitive. That's probably slowing down some of these.
I think that was the point of it.
I think that was the intention.
Yeah.
From what I saw, and I do almost exclusively real estate, the people that were buying that weren't from Nova Scotia were buying to create long-term rentals for people.
Interesting.
There wasn't anybody buying and leaving it vacant or buying it for an
Or like a
Airbnb.
cottage or
It just
something,
it didn't
or-
make sense.
That's what it was. It was a deterrent for that exact reason.
So I'm not sure if it really had that effect. Like my clients that weren't from Nova Scotia that were buying long-term. They were buying long-term rentals, and they stopped buying long-term rentals in most instances because of that. What I find it's catching people on now is we've got a lot of parents whose children are coming to Halifax to go to university.
Right.
So they can't get into residence because the residence is full.
Right.
They can't find an affordable apartment. So
'Cause they don't
hey,
exist.
let's buy our child a condo, not thinking that they're going to have this 5% transfer tax because mom and dad are from, say, Ontario.
Right.
So that seems to be
So that's a big
where
shocker
I'm-
sometimes once they get
that's
to
a
your
sticker
office.
shock.
Yeah.
So that's right in our opening letter. We ask in bold, please tell us right away if you're not Canadian or a permanent resident, because there's bans, there's
Of
rules
course.
and regulations around that now as well. And please tell us right away if you are not Nova Scotian or you don't intend to become Nova Scotian within 6 months, because we don't want people surprised. But you got to be careful because, as you know, sometimes we start off qualifying the child and they think that they're pre-approved. They're going to buy this house. But when we get further down, they say, ooh, you're not quite there. We need to add on mom or dad.
Right.
And then what happens is they're adding on mom or dad from Alberta.
Yep, there it is.
And nobody's telling me until I
Yeah.
get mortgage instructions.
go.
Now, what
and
happens
then there's
if-
another
if-
5%.
Yeah.
Right. What happens if the child's on there though and they're going to reside? Is that okay? Or how would that work?
So it's based on percent ownership.
Right. So that brings up a really good segue. Now that I'm thinking about something,
Okay. It's good that you're finally thinking about something.
I mean, I'm always thinking about something. So, to have different percentages, tell us about the different types of ways you could possibly take the deed.
Sure. So what you would see frequently would be joint tenancy. So spouses, for example. Most common. So if you and I, Clinton, were on title as joint tenants and I passed away, you would get the property. It would go over to you. That's
Automatically.
it. Automatically. Doesn't need a deed. No probate tax.
And it doesn't matter what's in a will, it'll just automatically
Just
go to
automatically going to go to you.
Got it.
The other way to do it is tenants in common. So tenants in common means, like, say you and I bought something together, we're tenants in common. If I die, that goes to my estate.
Right.
So my share goes over there. So it's not an automatic transfer. We each own individually our separate
It
pieces.
could be 99-1, it could be 50-50, it could
and
be anything.
That's exactly it. It doesn't have to be equal. So
Okay.
maybe I, as the Alberta parent, own a 1% interest in the property, and my child, who's a Nova Scotia resident, owns 99%. Now we're only paying 5% tax on that 1% interest.
Makes a big difference.
So not always going to work. Lender might not like it, might not actually be the intent of the parties. We really do need to look at that.
Of
and
course,
have
it needs to be legal.
discussions. Has to, everything has to be by the book, but that could be an option if that was the intention, that the child was going to own 99%.
Right.
And we'll see
Because
that
maybe
a
the
lot.
parents are just on there for financing purposes.
And that's when we see that happening a lot. They're
Right.
just, traditionally, 10, 15 years ago, banks were all about you could add somebody on as a guarantor. And they seem to have gotten away from that. And they want people
them
on title.
Because they want to be able to serve
They
someone if something
want
goes
the
wrong.
person there. So, and that's caused issues because you're adding people on title. And even before this transfer tax, it caused issues because now you have a parent that's a title holder, so it's not their principal residence. They're selling it.
Capital gains.
Capital gains. You got to
I have a
deal
lot of
with
questions.
CRA. If mom or dad passes away
Estate
and
issues.
you've got estate issues, maybe their will
we
isn't.
don't always like all our siblings. You know what I mean?
Listen, people don't think about it. And this is conversations we have when you do that. You're adding mom as a 1% interest. Well, does mom have a will that says that 1% interest goes to you? Or does it say it goes to all 5 of your siblings?
That gets messy real quick.
It can get messy really quick. So, it's not clear cut when we get into that, but there's always options, and that's the kind of stuff that you just need to chat with your lawyer up front so we know we can get ahead.
And I think that you also, just as much as you chat with your lawyer, you need to make sure that the lender is going to be okay with it, because
Yes.
a lot of mortgage instructions,
They want joint tenants.
They want joint tenants.
Yeah.
That's protecting the bank, because the borrower, the interest is going to the other borrower. They don't need to worry about estate issues and fighting with people and all this stuff. So I think that's important to take into consideration as well. So Danielle, tell us about some of these other maybe gotchas, when you get to the lawyer. Tell us about adjustments and like what maybe people would think about other than deed transfer tax.
Yeah, so you've got your legal fees, obviously. You've got your typical disbursements. So there's wire, there's courier, that sort of thing. Title insurance. So in our office, we title insure all of our purchase transactions. So it's something we can chat about a bit later. But that's going to be based on the value of the property. That's anywhere between $300 and up, depending on the purchase price.
And we've talked a lot about FCT here on our show as well.
And that is who we use. And that typically, like a lot of lenders require title insurance anyway,
Right.
so we're just...
It's prescribed.
That's right, yeah. Most lenders now do want title insurance or something else that typically costs more than title insurance.
Right.
You've got, depending on the municipality, the municipality is going to charge a fee for giving something called a tax certificate. So if I'm purchasing property, I want to make sure that the property taxes are paid. I don't want to buy something with back taxes.
Of course.
So in HRM, for example, they charge $100 to tell me this. So $100 for a piece of paper that I get by fax. We've got your tax certificate fee. Then we're going to have municipal recording fees. Provincial recording fees. So the province charges $100 to record your deed. They charge $100 to record every mortgage that you have. So on top of that, then you're going to have kind of typical adjustments. So when we get that property tax certificate, that's going to show us that somebody has prepaid the property taxes. So when you get your tax bill in April, you're actually paying up to the end of September.
Right.
So a lot of people don't realize that you're always paying ahead. So if you're buying this month from somebody, they've already paid the taxes ahead. So
Until
you got
September.
That's right. So you're crediting that back. So that gets added on to your purchase price.
Well, and sometimes you also need to prepay property taxes to the lender as well. Like sometimes they'll do a holdback to make sure you have
some
enough.
Some lenders want.
If
so
they're collecting.
We're getting into the cusp of that. So when we get into September, the lenders kind of get a little bit anxious about property taxes. So they might want the whole bill paid, or they might want me to hold back money, and the lender will hold back money.
Yeah. Danielle, it's been a real treat having you in studio. We appreciate the chat very much.
Thanks for having me.
And
Anytime.
I think lots more things we can talk about, so we'll have you back real soon, because I'm sure our listeners probably want to know some more as well. If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.